Good evening. This is Ken at Tortoise Capital with daily quiz for February 4th, 2019, a two-parter. So we're going to look first at an intraday trade in Microsoft on 1-minute charts. Here's the opening at 0930. That's item number one. Number two, we're looking at the VWAP throughout the day. 3 is the long-term fair value, the RL270. Number 4, looking at the Z3 pinch that occurred at the close and the opening. So when you get a stable close and then a non-gap opening, you will see a Z3 pinch, and then technically could have entered here on a breakout of the Z3 lines. I didn't. These yellow, well, that's number 4, excuse me. Let's look 5 through 10. Looking at the life cycle of MACD histogram, this was a shift from winter to a tiny bit of spring and right into the summer for a nice move into 6 as the rollover into fall. A very stable decline of the MACD. There was no corresponding fail in prices, which is a positive thing. Tech sector was amazing today and a leader as well. 8 became the entry when it crossed the signal line, crossed back over to 5-period moving average without even testing the 0 line, and so that was the trigger for this entry. It felt very late when I looked at items 12, 13, and 14, which were all positions where on basis of price action alone and the relative strength of Microsoft compared to tech, compared to the S&P, suggested those could have been low-risk entries. But that's number 8. Number 9 was after an entry, a 1, 2, 3 exit after a PSAR flip. And that corresponded with a rollover from summer into the fall and back into the Red River. This may have been a place where you'd be tempted to sell if you had any of those 4 entries. So that's number 9. Number 10 is just a reminder of the power of the 0 line as a long-term bias. I would also say this coincides with a fall getting ready to cross back up into summer for the next leg up, and that actually turned out to be a really good move. So if you got out, this is a place to get back in. It went up, tested 105.75 later in the day. So that's number 10. 11 is after this entry at 15. 11 was a reasonable stop starting at the Bollinger Band mean, and if you just keep that stable, that shows you about a 70-cent initial risk. 11 was a decision point to just use the Z-1, the bottom of the river, as a reasonable entry. As a reasonable trailing stop. And then you pick up the PSAR here at 16. 17 would have been a continuation of the stable initial risk. 16 looks to me to be a reasonable way to approach the trailing stops. You're getting in at Z2, and that's a 3. By this time you're at Z3, and in the time it moved from here to 11, that Z-1 line started at the VWAP, moved an entire standard deviation up to where your initial risk was. So that looks like a reasonable time to pick up the trailing stop. So 12 was 1, 2, 3 breakout and a hybrid frog. 13 was after a sideways quiet channel, a recross above the signal line, the 4-period moving average on the 10, and then you would get support at the edge of the river and continue. You get the price, the 10 and the 30, all out of the river in favorable price action is the argument for 13. 14 is a 1, 2, 3 generic pullback, finds support at the edge of the river and gives you favorable price action. And again, relative strength helps on this one. The market had gapped down and morning hooked and was starting to slowly grind up, and technology was better than the market, and then Microsoft was better than technology. So that's a low risk entry at 13 and 14, and certainly 15. So that's Microsoft. We're going to take a look at a series of 5. The intent on this quiz, a bonus quiz, is describe the narrative for each trade in this sequence. This is U Dow. That's the triple leveraged Dow. So there's the open, and you have a morning hook. So number 1 was a collapsing dragon, and then a reversal. 1, 2, 3 would be about here, and just really a scratch trade, stop and reverse on a morning hook idea. When you have a close on the far side of the dragon and pushing through the VWAP, and you get a nice RLXD exit. This is a high, a lower high, a collapse through the VWAP for a really nice trade, almost a Z3 excursion, failure to fail further, cover, and then an entry in number 4 when we go from winter to spring and crossing the 0 line. That's in the pocket, finding support at the RL 270 fair value. That nestles right in there. It feels good. Same exit here when it collapses back through the VWAP, and then short in a pocket. So now you have, I want you to notice the dragon, you have a high, a low, a lower high, and then an RLXD, and then a collapse below the VWAP. That's an auto short. This went down and tested that low again. Finished up for the day, but that's on the intraday move. That is a natural. It's front running the winter, and we ended up getting a winter move inside here. So those are the 2 quizzes for the day. This is Ken at Tortoise Capital. Keep your risk measured and your powder dry.